Hello, and thanks for joining me today. This is Mark Soberman with NetPicks. I'm really excited to introduce to you today the brand new NetPicks Keltner-Bells trading strategy. The Keltner-Bells trading strategy is designed to trade the Forex in a swing trading basis. Very powerful, very effective, and really looking forward to introducing this to you today. Basically, why the NetPicks Keltner-Bells works so effectively is what I want to show you is the combination of the Keltner channels, which some of you probably are aware of, and then something called a kettlebell, which again some of you may be aware of. This is actually a physical workout equipment or a physical workout, and kind of combining the two theories or the two philosophies of the Keltner channels and the kettlebell workout really creates a pretty dynamic tandem. And I wanted to really sort of take you through that so you can kind of see how it works in some real-time trading. In this case, I'll show you the pound US dollar. Now, I thought first it's just important to understand for those of you who do not know what a Keltner channel is, it's really just, as you can see on the screen here, this is an example of MetaTrader, for example. It's basically bands that are moving averages. You know, your middle line here is a moving average over a certain amount of time, and then your outer bands are basically what's called an average true range over a set amount of time beyond the midpoint, okay, beyond the moving average. And what that does is tends to do a really nice job containing price action. However, you see there are times that price will clearly break out of the Keltner channels. Other times, it'll stay very nicely contained within the channels. Now, that's one way to look at it. Others are, this is another example as you can see here, and you can go multiple average true ranges from the midline. So you can see this little dashed line is the moving average, and then you've got 1 ATR, 2 ATR, 3 ATR. So the more extreme it gets, typically, obviously, the more extreme the move is, and eventually you fully expect that the market is going to snap back the other way. Now, those of you who are familiar with a kettlebell, you probably have seen this. This is used, actually derived out of Russia, but it become extremely popular in workouts, and the reason for that is that it's one of the most effective ways to work out, and it really uses momentum and kind of reaching your max capacity. And the way that the Keltner bells works, as you can see this on the screen, as this kettlebell gets flung to the very peak here, probably the highest point, what you expect, of course, is there's going to be tremendous momentum, right, heading back down. And that's truly what happens in this situation, okay? So the way you want to think of it is think of like having a Keltner channel up here, reaching the max point, and then we're trying to take advantage of this huge move down this way. That's what we're looking for with the Keltner bells, okay? The extreme moves and then the snapback the other way. Another example, of course, would be right here. And I'll just make this equal opportunity, but we're looking for the same thing, the times where the kettlebell gets down to the extreme, and then the only logical place for it to go up is a strong whip back up the other way, and that's what we're looking for in the trade. So if you can kind of think about that as far as the philosophy behind the Keltner bells, it'll make a lot of sense here as I show you a real-time demo trading the pound US dollar recently here. And actually in this demo that's coming up, it picked up over 180 pips in a short amount of time, and we just actually finished today a new short trade that you don't even get to see on the chart. It was just developing, that went to full target and picked up another 90 pips. So go ahead and watch the demo that follows, and of course come to our website, learn some more information about the Keltner bells. Thanks for listening today. Again, this is Mark Soberman introducing to you the NetPicks Keltner bells. So here we go with the demo. Okay, so here's a walkthrough of the pound US dollar. The pound US dollar doesn't have the range that some of the other markets have, that we're using the 20 pip Renkos, so this is back down to a 15, very similar to what we're doing on the Euro US dollar. On the pound US dollar, I'm using 3 blocks above for my entry, at least at this point. Again, I would ask you to refer to the Owners Club to get the most recent settings in case there's been any change in market conditions or anything like that, or we discovered something even better. I'm looking for 6 blocks for a target, and I'm looking to risk, if I go long or short, 4 blocks. So the power ratio there is 6 to 4. It's still pretty good for us. It's 1.5 to 1, which is great. Again, if I can go 50-50, like I always say, we're golden. So that's my objective, or better, and the or better, of course, is what I'm looking for, because that's when it really starts to add up. So no surprises here. Different market, different Renko, a couple different parameters, same rules. Extreme position down here sets it up for a long. 1, 2, 3, we go long. I'm looking for 6 blocks to the upside, 4 blocks to the downside. I get to an extreme here that says yes, I can look for shorts if they set up. In the meantime, right, I end up having my trade move down to my stop, so I end up with a stop on that. A little unfortunate because it actually would have ended up rallying to target. So perhaps if my setting there was 5, well, sure, I would have been able to hang on. But you can't optimize. You don't want to optimize. You're not going to always have that situation. Go back to the sabotage section where we talked to you about how don't just change the rules when it just doesn't work for you, one time. But at this point, we know we're looking for a short. We're definitely getting some setups. We're getting some potential triggers, but it keeps obviously moving back up and resetting. As you can see, my shorts keep going higher and then higher. And they're definitely going to be higher again if I get another close below, which I do there. So again, here it is, and that's the new adjustment to the highest, another high level. So that continues to come up closer to market, which is really what you want. We don't want it to have to be, forever to get to an entry. So we get triggered on the short, kind of moving up and down here a little bit, close to a stop out there. At this point, right, I'm looking for, what do we say, 6. So I've gone 1, 2, 3. I've gone over halfway, so I can cut my risk in half. Not quite at the trade for profit zone, but I'm close. So worst case here is I just lose, which I do here, the 2 bricks, and I end up with the partial loss. Moving on to the next trade. I didn't get a buy. Unfortunately, this one just didn't get there because it looks like it would have been a brilliant trade to the upside. But again, right, this market's just kind of been barely missing, it seems, the last couple trades. But that's the way it goes sometimes. We get a short setup that triggers, and now we get a nice move to full target, and I'm in pretty good shape at this point with picking up that full 6. I'm right back in the game now. Get a potential buy setup developing here, another reset with a lower buy, trigger, and now I get this nice rally. Boom, now I go to full target, and you know what? I got 2 winners, I got 2 losers, and I'm actually ahead 90 pips. Pretty good story, right? I mean, that's exactly what you're looking for. Short setup is there. As I got to the extreme, we got the close below. 1, 2, 3 is right there. So we just hang out. We wait for the short, we trigger. Now we're only going about a bar our favor so far. There's 2, there's 3. Okay, so the good news here is worst case, if I'm able to catch this, I lose 2 bars. Now I'm in trade for profit zone. If I catch this and I come back in, I would definitely be tempted to at least go break even on this. Okay, if I don't get that additional bar. Coming back around, coming back around. All right, there's my gain of one bar, and there's my break even. So again, coming close, not quite getting there, but that's the way, again, it works sometimes. So worst case, maybe a break even on that one. I get my buy setup going, so trigger there, and now we're hoping we get this nice rally. Market's moving good. We've gone 3 of the 6, so I can cut my risk in half if I want. Now we've gone to trade for profit. I can even bring my stop up to break even if I wanted to, and right there I just booked a full gain. Now I'm up 180 pips. Again, I'm really doing just no better than 50-50, but by having the few situations maybe where I've cut the risk, or even without that, every single time I book a gain, I'm ahead of my losses. So straightforward as could be. Really not a lot to say on this one. This whole course will be a popular market as well. The range isn't as what it used to be. The pound US dollar used to have some amazing trading ranges. It will probably get back to that territory at some point. It cycles a little bit, but it's definitely a steady market. Overall behaves very similar to the euro US dollar. I would say at the time I'm recording this, the euro US dollar is probably a little bit more reliable between the two markets, but again, that can fluctuate certainly from month to month and season to season. All right, so let's go ahead and just wrap up that walkthrough.